as well and find out what she's making of the market right now. Shibani, it almost seems like we're dried up of cues. The RBI also fired a big bazooka. What next? Do you think it's now really towards US and China, and what comes out of that 90-day haul on tariffs?
Yeah, hi and good afternoon. So you're right. We've had an exciting week with a lot of policy action. But what has been a standout for us in the market has been that domestically, if you look at most of the macro parameters, especially in context of what's happening globally with the trade and tariff war as well as geopolitical tensions, domestic macro seems to be holding up fairly reasonably well. And of course, the policy push from a monetary side, which we've seen over the last week, or rather this entire calendar year to date, and liquidity improving overall. The other factor I think the market will clearly focus on is the earnings trajectory. So when you look at Q4 FY25 earnings, despite the fact that expectations were muted, I think the earnings delivery was actually better than expectations, especially where the large caps and a select few mid caps were concerned. And therefore, that sets the trend in terms of how earnings possibly pans out for FY26. Now, on a mid-single-digit earnings delivery for 25, now consensus expectations for 26 is of double-digit earnings growth. And if the domestic macro continues to hold up, and also the support in terms of growth that you've seen from a policy perspective, hopefully earnings should start to improve, albeit at a moderate pace. And that possibly should be the factor that the market clearly looks out for. From a valuation standpoint, of course, our markets are not cheap. And given the current run-up that we've seen, our belief is that from a risk-reward perspective, large caps still continue to be better placed than mid and small caps. But mid and small caps, there are opportunities, and therefore one has to be more bottom-up in that segment. But one has to overall, if you look at the market, mid and small caps continue to trade at a premium to their long-term average multiples.
Shibani, hi, this is Snehi also joining in. We spoke about a couple of triggers that have led to some sharp market moves, be it the budget, and followed by that you have the policy, you have earnings. What's the next big trigger that could shape up the next trend for the market? Could it be monsoons? Because we're predicted to have a healthy monsoon this time around. So do you see any turnaround coming in the overall consumption space?
Yeah, so consumption is a space where, we believe that there are quite a few triggers. One, as you rightly mentioned, the budget set the tone with the tax benefits that were given to the middle income and the mass segments. Therefore, that should help in terms of boosting consumption. The second is, of course, interest rates have come down with the RBI cutting policy rates by 100 basis points calendar year to date, and the CRR cuts which are to follow. So from that perspective, the interest rate burden on the consumer should also start to come down. And the third factor, of course, for consumption is the monsoons. Hopefully, as per what has been the initial estimates, monsoons this time around are also normal, which helps in terms of boosting rural income. Now, when you look at the income buckets within rural and urban, in fact, what we've been seeing is that rural income levels have started to improve, and with inflation coming down, real rural wages have improved considerably over the last year, and that is possibly supporting demand. What has been missing has been the urban mass consumption demand, and hopefully now with rates being cut as well as the impact from the budget, which will help in terms of higher disposable income, some amount of that urban consumption should hopefully start to come back. And therefore, I believe is that the consumer discretionary pack, especially in terms of mass consumption, that is a segment that should likely benefit in this current policy environment and overall macro environment.
Okay, since we're talking about the contra and bottom
the sales of some of these pharma majors have taken a hit, but that has also been a sector that has been largely underperforming. Now, on a year-to-date basis, while the flavor of the year has been with the financials, barring that, where would you place your bets in a market like this? Any themes where you're seeing some resurgence, or would you like to stick with the ones that have already outperformed so far?
Yeah, so from a theme perspective, one large theme that we already discussed was the entire consumer pack, especially the discretionary consumption and the mass consumption segment. The second, of course, is the BFSI space, given the policy initiatives and hopefully the improvement in credit growth that should ensue given the rate cut cycle. The third segment, and as you were discussing, is on the pharma space. But within pharma, of course, pharma is a fairly large segment with different parts now comprising the sector. Within pharma, we continue to be positive on the healthcare space, which is essentially hospitals. Now, in part, some of this segment has outperformed, but our belief is that as per capita GDP growth continues, the need for quality healthcare continues to rise, and therefore this is a structural story. As affordability increases, that growth continues, and some of this is already reflected in terms of numbers that you've seen in terms of occupancy levels, as well as growth in terms of profitability for the hospital segment. Now, as occupancy rises, many of the hospitals are also looking at expansion plans. Some of this expansion is brownfield in nature, which means, again, on a longer term basis, better profitability. So within the healthcare segment and pharma segment, hospitals is one area that we continue to be positive on. And we are also keeping a close watch on what's happening globally, especially in North America, where the tech segment is concerned, given the kind of volatility that we have seen in this space. And there again, we believe that there are structural opportunities. However, near term, of course, there are challenges because of slowdown in US demand, and which is impacting some of the IT players in terms of growth outlook in the near term.
Well, the big shake-off seems to be happening within the...
That quick food delivery is an up-and-coming theme, and you already have major forays by the listed players. You also have, on one end, trouble looming when it comes to Zepto. On the other, you have a big splash being made immediately by Rapido. Where do you see this space headed? Because this market is already so competitive. How worse, or how much more worse can it get before it starts to get better?
Yeah, so when we look at this entire space, let's put it into two parts. One is the quick commerce segment, and then the food delivery, which is what you were discussing earlier. On the food delivery side, over the last many years, what we have seen is there was very high competitive intensity. Competitive intensity abated, and then you were left with two large players, and it became more or less a duopoly. So we'll have to see, even the food delivery basket, how a new player enters, whether the new player is able to scale up and become a pan-India player, or it remains a fringe player, basically focusing on a few specific markets, and that will possibly have a bearing overall. But as of now, when you look at the food delivery segment is a profitable segment. And given the fact that, competitive intensity has actually come down over the last 3-4 year period, this segment has seen improvement in terms of overall profitability. Now comes the quick commerce space. That segment is likely to remain hyper competitive for some period of time in the near term. However, our belief is that players which have a focus in terms of moderating or looking at cash flows as well as profitability over the longer term will possibly emerge victorious in this segment. Like we saw in the case of food delivery, when there was hyper competition and then the competitive intensity started to abate given the balance sheet strength of a few players. Possibly over a medium term, something similar may unfold. However, at this point in time, within the quick commerce segment, the intensity of competition is likely to remain high, and that is something that we will have to navigate with. However, if you look at the overall addressable market within both these segments, the addressable market remains fairly large, penetration levels are low, and therefore there is runway for growth. But in the near term, as I said, for quick commerce, we will have to possibly contend with competition and therefore impact on profitability.
Yeah, absolutely. For now, of course, they've got pretty range, in fact, Zomato, for a while now, ever since, because that definitely gives a fillip to consumption. But do you think it'll just stick by with NBFCs as well as perhaps auto companies and realty plays benefiting? Or do you think the trickle down could go as low as staples as well?
No, so I think, of course, the first derivative and the first level of impact comes more on the discretionary side. So when you look at the rate cut cycle that we have seen this calendar year, the 100 basis point of rate cut is a pretty substantial one. And that, along with the CRR cut, means that overall the system liquidity should improve. And that again trickles down into the consumer in terms of lower rates. The first point where the rate cut will be possibly, or the segment of lending where rate cut will be very visible, will be essentially the home loan segment, because a lot of these loans are floating in nature, many linked to the repo, and therefore you do see EMIs come down on home loans. So that's one area. The second, of course, is the entire discretionary consumption segments, where over a period of time you will start seeing the rate cut getting transmitted. So I think for the entire consumption pack, the monetary stimulus from a policy perspective, together with the fiscal push on the discretionary side, should start to flow through. What we have seen and what we were discussing earlier was that the urban consumption, and most of the commentary from consumer companies also seem to suggest so, that urban consumption has been lagging rural. And in fact, unlike last year, this year rural has actually picked up better than urban. Hope is now, with the rate cut cycle as well as with the tax benefits, the urban consumption starts to improve. And monsoons coming through should help in the rural segment as well. So yes, the first impact, I think the more direct impact would be on consumer discretionary, and then some trickle down on the FMCG side as well should start to flow through. More importantly, for FMCG, input cost pressures have come down, and that should also help in terms of margins. So overall, a consumption as a pack, be it in terms of discretionary, autos, some parts of quick commerce, quick service restaurants, retail, travel, transportation, tourism. These are all segments which should hopefully benefit from the measures that have been taken.
Point taken. Let's also welcome on board now Vinay Rajani of HDFC Securities, who's joining us on the show. And Vinay, good afternoon.
Still pretty quiet on the index, and the market breadth as well seems pretty split and divided, just marginally in favor